Good morning. This is Butch Shorak, Options University. It's Monday, August 27th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's take a look at the week that was as far as economic announcements, and basically what we'll see is that there was very little there all week until we get to Thursday morning jobless claims, which take place every week, missed again. And other than that, there was not a whole lot that took place during the week that was. Looking at the week that is coming, we see that we are loaded with information. This morning at 10:30, we've got the Dallas Fed Manufacturing Survey. Tuesday, Case-Shiller. Tuesday, Consumer Confidence. Tuesday, Richmond Fed Manufacturing Index. Going into Wednesday, GDP can move the market. Pending home sales, which hasn't been moving the market. Jobless claims on Thursday morning, just like every Thursday morning, which has missed the last 2 weeks. We'll find out exactly what kind of unemployment numbers we had last week in our great economy. Personal income and outlays, and then finally Kansas City Manufacturing Index. Friday, not to be left out this week, is going to show us the PMI, consumer sentiment, and factory orders from 9:45 till 10 o'clock. So we have a week that it was and a week that's to come, and the week that's to come has plenty of economic announcements, plenty of ability there to move the market if the market's ready to move. Last week in August, the week after this, we're going to be looking at a 4-day trading week with a holiday on Monday, so it certainly should be an interesting week as we wrap up the month of August, which has certainly been a rally month in this election year, which doesn't greatly surprise us. Next, let's take a look and see what happened to the SPX during this week. The trend, as we see, continued in an uptrend, and continuing in that uptrend, we see that we suddenly this week pulled into a down cycle as we got lower highs, lower lows, pulled back to that 1406 and bounced a little below it, getting that support right down there at 1398. Have not hit the 30-day moving average yet, as we had quite a week last week with our first pullback in 13 trading days, which is a long run in a summer market. Looking at a little closer look, notice these are marks that were left on the chart. We see, looking at Monday, Tuesday, Wednesday, Thursday, and Friday, higher highs, higher lows on each day of the week. Had news on Tuesday, got a big bounce, went up and hit that resistance line, and then pulled back the rest of the week as it could not hold those gains. Got down to 1398, and remember, we've got a target down here at 1386. Until we change this cycle, that's where we're headed. We do have a cycle that is a down cycle in an uptrending market. Let's take a look and see if the Dow followed along in the same manner. Looking at the Dow, we see exactly the same kind of move. 13 days up in a row, got a new high for the year, and that was the turning point on Tuesday when it came back, pulled to the 30-day moving average, and then the Dow gave us a bounce on Friday off of that 30-day moving average, which may have caused the whole market to rebound with that technical move. Looking at the NASDAQ, we see the NASDAQ didn't give us the same kind of look. It did bounce up during that 13, but notice this area where it had a hard time moving up did pull back last week with the S&P. Then looking at the Russell, we see that again, we didn't even get out of the trading range on the Russell, as the Russell remained in that trading range that it's had since July. So see a bit of a pullback. Russell is often important for us to watch, as it many times will give us a one-day lead on where the other indexes are going. Looking at the week, we can see that looking at the indexes, looking at the Dow, NASDAQ, S&P, and Russell, we see the change was all negative numbers, ranging from minus 1.3% on the Russell, down to 0.2% on the NASDAQ, which pulled back the least, had the most relative strength. S&P had a minus 0.5%, and the Dow had a 0.9%. Year to date, look at that, all big big positive numbers for the indexes, as the summer rally certainly provided for us nice health in it. And showed us that we could approach those yearly highs that we had gotten earlier. Looking at the VIX, no big surprise. Market pulls back, VIX pulls up, but look at the range we're trading in. Not a whole lot of fear or volatility in the market at this time. Let's take a look at some of the sectors that are sitting in there in the market. Let's take a look at the bonds, and we see that as the market pulled back this week, had a little bit of a pullback. The bonds pulled back into its normal summer trading range. We had a dip, didn't make it to the 200-day moving average, as the bonds have shown great strength in the last 2 years. Let's next take a look at XLF, our financials. See that it broke out with the overall market. Not a big surprise, as a rally without the financials really isn't a rally at all. A little bit of a pullback in the financials following the overall market gives us potential. If you see the market begin to move up in general, you can expect that the financials will move up, and potentially some money to be made for you option traders in that ETF XLF. All right, let's take a look at oil. See that oil continued on up. Very little pullback in oil. And then finally, we're going to take a look at gold and see what our safe haven did, as we had a little bit of a down cycle in the overall markets. Oh, no big surprise. Safe haven had money go into it as it broke out for its recent high in the last 3 months. So the sectors did as would be predicted of them, and we see that the market is holding up just fine. All right, now let's take a look at the spider, that ETF, which shows us very much the same type of graph that we get out of the SPX. But what I want you to look at is look at this. Look at that volume. Absolutely pitiful in the month of August, as we had a rally on very low volume. So don't be surprised and be concerned about the month of September, which many times is our worst month of the year, setting up for the best quarter of the year, which is the fourth quarter in this market. With that thought in mind, those of you that are gold members, stick around. We'll take a look at our stocks to watch and look at some of those charts and see how they held up this week relative to the overall market. So with that thought again, this is Butch Shorak, Options University, Monday, August 27th, 2012. Bit of a pullback in our summer rally, and we'll see whether it holds. Monday will be a key day for us as we see what happens. Look at the opening high, opening low to determine which way the market is moving. And thank you for being here.